Welcome back to Invest Global. What you're about to watch is a conversation that I had with Roland. His channel is called Microwhale. It will be linked down below in the description. I met him while I was in Tbilisi, Georgia. Enjoy the video.
A lot of people in crypto are just married to their ideology. And because, I myself, I'm completely libertarian. I hate governments. I would love to just don't pay taxes and just do my own thing. And there's no regulation. That would be my dream world. Of course, that's not realistic. But you just have to remember that that's just not realistic. And we will have competition with government regulation, as we can see in the US right now. And I do think that there's a huge case to be made that a lot of these altcoins will be registered as securities. And I think the long-term vision is great, but it's just not there yet. I think it's similar to the dot-com bubble, where you have all these very, very interesting future possibilities, and eventually we will get there. But right now we have all this infrastructure. We don't have stocks on the blockchain. We don't have products on the blockchain. We don't really have a lot of people interacting and sending money abroad. That happens in some developing countries where they actually need that. But because they're developing countries, that doesn't really make up for a lot of transaction volume.
It's much more of a situation where projects that have these concepts for long-term growth, like Smart Key is a great example. They're building for the digital future of cities, like smart cities, but all proof of concept. It's in that category.
Yeah,
there's not that
proof
much
of concept. That's
exactly. But in the short term, see again, like Cello is one of these that I would say long-term play, because they're focusing on building in emerging markets, and in anything that's physical, like anything where it's attached and it has a tangible kind of a downside, like merging crypto with houses, with real estate, like a decentralized finance real estate market. There's a massive problem, and the physical things have so much downside. And that's why I do think there's some interesting plays currently in the market with the metaverse things. I do think those are really interesting. And especially after our last chat, I looked into it a little bit more, and I'm a little bit more convinced because, it's one of these things where the concept of earning online or making money online, I think may have been crazy to some people 10 years ago, but now people are doing it so easy. Tim Ferriss wrote the book 4 Hour Workweek, and now it's okay, it goes beyond just working for a company remotely. It goes to, okay, you're not even working for one centralized authority. You're working in the metaverse. You know what I mean? So people are having goods and services traded in the metaverse. I think it's very interesting. But again, the things that right now you're not able to use, those things I put in that basket of, okay, kind of set it and forget it. Long-term investments. Don't really get too worried about the volatility, because if you structure your portfolio correctly, you could do it without kind of losing sleep, But in the short term, these are the plays that I'm interested in. And that's why I was Trader Joe and these ones, I'm fascinated.
How do you manage your risk in crypto then? Because even if you have a long-term perspective, and even these are plays which have long-term longevity, if Bitcoin gets crushed and you go into a bear market, even the best projects lose 50-80% in value.
Yes. So that the whole point is having kind of set it and forget it. So personally, I set it up as dollar cost averaging, where I don't even look at it. You know what I mean? So I don't even look at it. It just, I automatically am accumulating more. So I'm literally averaging in. So when you average in my opinion, you believe in something long-term and you don't need that money for your daily life. Now, the difference is if you're investing the money that you need for your daily life to pay the next month's rent. But when you have yourself structured in a manner that you can pay for a long time of life, right? And now you're just looking at what should you invest in? That's where I look at it.
How do you manage your cash position? How much percentage are you invested?
I have about half in DAI, half in USDC. I do have some USDT, but it's like an interest bearing. I have it on Abra, so it's like an interest bearing account. But those basically I use to average in. So if I see a project that I like Trader Joe, typically if I have time, I'll try and trade it. And then what I'll also do is just average into the actual token itself, and then not really worrying about buying it or selling it, holding it relatively long term. You know what I mean? Not worrying about the day's volatility, more worrying about, okay, what was my entry position and what's my exit? So I think the biggest thing is the inverse of what most people do. Most people spend all their time worrying about their entry. But honestly, the most important thing is the exit, because if you invest, if all you have to invest is $10,000 or whatever, $1,000, you can multiply it however you want. But if that's all you have to invest and you have all this sunk cost going into it, you need to tell yourself, and nobody does this, and not a lot of people do it at least, is, hey, I'm going to set rules where exactly when it hits this amount, it's like a stop loss in your mind. When it hits this amount, I'm going to exit out. Like I'm going to cut my losses and say, hey, I'm going to go home. Versus you also need to have an exit point at the top, because so many people in 2018, that's where they got destroyed. If you don't set those like boundaries for yourself, that's where you get screwed. So personally, like I'm very methodical about it. And I typically like to like strike once, kind of, so make the plan and execute the plan and then just stick to it and look at it as like an experiment. You know what I mean? Because if an experiment goes wrong, the main thing is you learn from it. That's the biggest thing. So if you're looking at Cello and you build a thesis around it, and you can do this in a small version. You can do it in an hour if you want, but it's really just about being like kind of methodical with your approach to invest. For me, it's a lot about the framework, like setting your own rules, because again, I think in crypto, so many people have so many different wallets, or at least I did when I was first starting out, but I like it all in one place. Like I think you said you use something other than Blockfolio, but that's what I've used for a while, is Blockfolio.
Yeah, I use CoinStats.
CoinStats, yeah. See, I need to check that out. But for me, I don't know. It's just it's interesting, and especially when like the majority of positions that I was in was when Bitcoin was below 10K. So for me, it's all just like okay, this is cool now.
Yeah, that's great, of course. Okay, so I meant something different when I asked a question, but I absolutely love your answer. But what I wanted to know, like, I mean, how do you how much percentage of your portfolio, like if you invest, like is in like just stable coins, and how much is like invested? And like, do you shift around with it? Do you have like a strategy concerning to that?
Yeah. So that's the Trident. So like I break it up kind of like it's roughly 30%. It never has to be exactly 33.333. You know, like that's not the issue. But for me, it's kind of thirds. So breaking it up into thirds, having a stable coin position where you can take advantage of opportunities. So that's kind of the idea of having like dry gunpowder, to similar to any other capital market, to enter into the market basically when everyone gets really, really scared, like what we had at the beginning of the pandemic, where everybody got scared, and like that's when everybody like myself got very, very excited and like bought all these commodity stocks at very, very low valuations, you know. So that's kind of the dry powder where like when something like the recent crash happened and your overall long-term 10-year thesis on Bitcoin is it's going to go to whatever amount you say it is, that's when you average in. That's when you take advantage of those positions. As long as you consistently do that in a way where you set up your own approach, you build your own framework with it, that can be massive. And then besides that, like the second prong, I would just put into long-term, and then third prong is short-term. And then each of those kind of have subcategories, but that's the overall kind of a structure. But long-term would be about like 30%, and then short-term. And in the purpose of short-term is to add to long-term. You know what I mean? So the whole point, like what you're optimizing for when you're looking at that short-term portfolio, is not to go, hey, I'm going to make a bunch of money and rent a Lamborghini or whatever. It's no, long-term. Everything you shift it back over, you know, and the whole point is to grow the whole pie, obviously. But in the short term, once that gets so bloated, you got to skim that off the top. You know what I mean?
Yeah.
Some of these like, I mean, can go insane, and that's when psychology really is important. I did a video when I was in Costa called like Psychoneuroimmunology. My dad's a neurologist, so I grew up around like people that were very, very focused on like psychology and the mind. And I think it's fascinating with people in the investing world, like the Wolf of Wall Street guys, and these people were like, the money messes with you so much, and if you don't have these rules set up proactively versus reactively, you know, like people take pills to react to things, but proactively you should be like improving your body, improving your immune system, all these different things. But if people aren't proactive about their investments and going like, I should build these kind of these habits and kind of this framework around it, that's when you get screwed. And then reactively, you have to sell your positions when you're 10x down, you know, your point.
That's how I lost like a lot of money during the crash, because I had some ideas.
Did you have to sell?
Sorry?
Did you have to sell during the crash?
I didn't have to, but I should have done before that, right? Because I basically was like,
this most recent crash, or like the big one, like
no. Oh, the most recent crash was absolutely fantastic, because like my whole portfolio was just like going up and everything was going down. So I found absolutely amazing.
Avalanche so outperformed the market. I was actually thinking about doing a video. I didn't really have a lot of time when I was in Athens. But I'm thinking about doing a video like why was Avalanche such an outlier? You know what I mean? That's what I find so interesting is on any of these sites that aggregate the data of all these top projects like CoinGecko, CoinMarketCap, whatever you use, you can see that 7-day chart and just how correlated everything is. You know, if you're a trader, you can just trade the correlation. Yeah. When something kind of pops out of the Bollinger Bands, you can kind of trade the trend back in. But with Avalanche, when this kind of whole crash happened, it was doing gains every single day. It was kind of crazy. And then like other projects in the ecosystem were also doing really, really well.